Welcome, G3 investors. Let's look at the market for the week ended February 10th. Wall Street had a downbeat week after having mixed results on Friday. See here, the NASDAQ lost 2.4% for the week, and it pulled back and was sitting just above resistance at 11,600. This is a green dotted line here. But it's still above its 200-day moving average. If we look at the S&P 500, we can see that it is closed below its resistance. It closed at 40.90, even though it was only down 1.1% for the week. But the resistance line is at 4,100. But it is still above its 200-day moving average, and the golden cross that we got last week still remains intact. I think if we look at the Russell 2000 here, this is the strongest index, but it also had the biggest pullback. It pulled back 3.4% for the week, and it just closed just above its resistance at 1900. But again, it's trading above its 200-day moving average, and we have another golden cross there. So the market pulled back this week, but it's still trading above. For the most part, the indexes are trading above their 200-day, and so the uptrend remains intact. Now, if we take a look at how the model did, we gained 10.4% for the week, bringing our year-to-date total to 26.6%. And we can see here almost 64% of those gains are coming from short trading. The short side is winning out. And you can see here we're crushing our benchmark both for the month and year-to-date. There we're beating the S&P 500 year-to-date by 20 percentage points and the NASDAQ by 14.6%. That's looking pretty good. Now, the model had two open positions, so let's take a look at that. XLE, which I believe is the energy sector, yes. And you can see on this one-year chart, which we've been doing consistently here, we got in at 89, and it's trading above both its 50 days, trading well above its 200-day. The blue is above the red, and we got in at 89, and it looks like we're going to go back and test these highs around 94. Now, the other ETF we had was USO. Again, this one's in a little, it's coming up off the bottom. So it had a strong move up off the bottom, and it got right here. We said we'd enter it at 69.50, and so we did. But this one's got some work to do, but it's got a lot of potential if the price of oil continues to go up. So who knows what's going to happen there. Now, the tech stocks pulled back this week, so let's look at a couple of those. We've got SMH. This is the semiconductor index. And again, we've made some good money on this one so far this year, but it pulled back just like the NASDAQ did. So obviously that's we're looking under the hood, and that's what's causing the NASDAQ to pull back. So if we look at technology, XLK, we can see a similar pullback here. We haven't had the golden cross on technology. And let's see. Let's look at the QQQ, which is the NASDAQ 100. Again, it looks very similar to the NASDAQ composite index. Was like 4,000 stocks. So okay, so the tech stocks pulled back. How about some of the other sectors? So let's look at that. I think we've got a pullback. Now there's the financial select sector. So that's, your financial services and your Goldman Sachs and Merrill Lynch and those guys. That's pulled back. If we look at the industrials, XLI, and the industrial sector is pulled back. XRT. Yeah, that's a pretty strong. That was a very strong move here, and we had a golden cross on XRT, but it's pulled back. But again, that golden cross still remains in effect, so we're hoping this is just a short-term pullback. Yeah. So let's look at the SPY. which it mirrors the S&P 500 exactly. And then I don't want to forget transports. Yeah, it's a pretty strong pullback there. But again, a nice move. And we have another golden cross. Let's look at consumer discretionary. We don't have a golden cross on that one. And that one's really still in a downtrend, but it did get above its 200-day moving average. And so we caught this little move here, but it pulled back and it's sitting right above its 200-day moving average. Well, take a look at the heat map. This is the S&P 500 for 1 week. And so we do have some winners here. There's Exxon. Exxon's up at 6.5%. Merck, 5.5%. Is up. We got United Health Group up 4.7%. Tesla up 3.64%. And let's not forget Microsoft, up 1.8%. But the losers this week were the big tech stocks, some of them anyway, the glams, as I like to call them. There you've got Google down 9.85%, or Alphabet. I can't call that stupid thing Alphabet. And then Meta down 5.5%, or 6.4%, sorry. 6.64%. Amazon's down 5.6%. Home Depot's down 4.5%. Let's see. There's PayPal down 5%. And there, of course, is Apple. Oh, don't forget Intel and Advanced Micro Devices. Those both had a big pullback. There's AMAT. And then there's Apple. Oh, that's all for this week's video. Next week, we have CPI data coming up for the month of January, which could be makes for some interesting trading. I'm Greg Gallagher with G3 Investors. Good luck and good trading.